Good morning and welcome to today's edition of the Daily Market Commentary. I am your host, Chuck Fulkerson. Hope everybody had a great trading day yesterday and is looking forward to another amazing day today. Thanks all for joining us today on our Daily Market Commentary. We're going to take a look at some of the same futures markets we do each and every day. I've kind of switched this to a morning routine as I've gotten a fair amount of feedback that most people like it in the mornings. If you do, let me know. If you want something in the evenings, let me know. Or if there's maybe a topic that you want to see covered, I typically like to do, one of those live stream videos every quarter. So I'm looking for my next topic for a live stream video. So let me know in the comment section below if there's something that you'd like to see. So let's go ahead and get right into it. So yesterday we saw a little bit of a rally come back, and I say a little bit of a rally, but it's only a little bit of a rally compared to, the day that we had before. And really what we saw in the S&P was a huge run back up, just not quite enough to erase everything that had happened the prior day. So our S&P, as it stands right now, we're down 8 in the futures. Although earlier in the night we were down a little bit more than that, but we're still down. We're down 8 from yesterday's close. And it's definitely, putting a little bit of a base and kind of continuing that march back higher. They say that the markets take the elevator down and the stairs back up, and that's exactly what we've seen. Now, I will tell you that we did bounce off of this little area down here, and that's continuing to run. It fell through a couple of levels to get to that one, though. So, but we bounced off of this, and now I've got a very wide swath of areas and zones, if you will, where I'm just not yet comfortable playing this thing for the S&P futures markets. I'm okay, getting in for small trades, maybe even on smaller time frames at this point, if you're looking more at a day trading style. But these candles are just bigger than what most traders are going to be comfortable with. I mean, I spoke to a really good friend of mine yesterday, and we were joking around that the ES had 36-point ATRs on a 60-minute chart. It means the S&P is moving 36 points an hour when we looked at it, and it's a nonsensical time for me to be trying to get into the market, right? So I left that be. But that being said, on a 15-minute time period now, we have seen a little bit of, we'll call it normalcy, kind of come back to the markets, a little smaller areas. So I want to keep this area in mind. I hadn't highlighted it yesterday, but as we are approaching it, keep this area in mind as a potential. Now, normally, I will tell you, based on the price pattern that we're putting in, I would look at a breakout long, okay? So look at this right here. So this is tempting for me to look at a breakout long and a breakout above 2,700. And this is actually what I looked at last night. When I laid down last night to go to sleep, the markets were right about here. Right around 9 o'clock last night, I closed the computer, was going to lay down, put my head on the pillow. I really tried not to look at the markets too late, but I was tempted to put to go long above 2,700. And then I went to the 15-minute chart and saw this little bit of an area here. So, when we think back to our rules on breakout trades, rule number 1 was that I wanted a level that had been tested a number of times, and then I have to have room to roam. And this isn't giving me room to roam. Now, by the way, this could be a pretty weak little area and blow right through. It could be a pretty strong area, as it was a fair amount of fair price in this region. So what I'm going to do is I'm not going to trade either one of them. I'm going to remove them both. You as a trader certainly feel free, knowing your own risk tolerance and the style that you have to trade. For me, I believe that discretion is the better part of valor, and I'm going to stay away at this point. So, but just keep an eye on those areas, just maybe to see how it reacts and kind of see what happens. In the NQ, in our Nasdaq markets, we are also rallying down now 15 from yesterday's close. In the Nasdaq, very similar to the area that I've got in the S&P, I've got actually a slightly higher potential buying or potential selling area right up in here. And that one we touched it once and then moved away from it. So I'm going to keep both of those areas intact. And there's nothing down here yet that is giving me a good buying signal. Now, if you're a candle-to-candle style trader and you wanted to be in this thing right now, I wouldn't be object to that, as we have you know, we're in we're in that upward momentum. We've got a higher high on the candlestick. You can move your stop up to below each individual candle's you know, higher low. Looking at crude oil. So crude oil has traded into our area. I like to see it trade about halfway in, and then, you know, it's traded into our area, and then we get long as it comes back out of the area. So for me, this hasn't traded in quite deep enough yet. 62.80 would really be kind of the number that I'm looking at in here. So I'd want to see this come in a bit deeper before I would get in. So remember, it needs to come in about halfway and then come out for this to be to follow the rules of what we're looking for. Now, one of the things I'm not a fan of is this bit of sideways price action before the area. So keep in mind that sideways price action before the area that we have right here is definitely a factor when looking at this kind of a position. It weakens the probability of the overall trade. So, you know, I got to tell you, at this level, I feel like the better chance on crude oil is to continue to fall, especially when I look at it on the daily chart, because of our weakening momentum picture that we had on the daily chart. And I've talked about this for the last number of days. I think there's a chance that oil could continue to fall. You know, down into this area is really a better area to get back in on the long. When I go back in and look, we actually have a trend line. We're still not to the trend line yet. So, you know, the upward trend here was slightly overextended. So a little bit of a pullback is to be expected. Okay. So really, you know, if you want to take the long in crude oil, it is there for you at the moment. Gold is showing some overnight weakness, and some overnight weakness in gold as we're seeing some strength in the equities markets. You might have a little bit of an area here for a selling opportunity in gold if we do get a bit of a rally back up. You know, we're seeing a little bit of overnight weakness in gold, but this area is, I think, still pretty valid kind of going forward. Looking at our bonds, Aussie, Euro, Canadian, so our bonds and our currency markets. Our bond market, we almost, I mean, this is just close to getting filled. You know, didn't quite get filled on that area. It's still valid, still in play. Take a look at this Aussie trade though that I had set up as a potential on the 15-minute time period. This Aussie trade that we had set up on the 15-minute time period, price came in, immediately gave us a slight run out. And then gave us the stop out. So this area did not hold like I expected it to. I thought maybe we would get a little bit of a hold off of that, and it's been unable to hold on to that move. The euro, we didn't come into the area, but the same thing happened to the Canadian. So both the Canadian dollar as well as the Aussie really just chopping around that area. Both of those should have been essentially break even stop outs for you, or you know, or at worst a small loss on both of those. That's one of those ones where, remember, anytime we do it in purple, we're looking for slightly degree of lower probability, and those can turn into like 20-to-1 winners sometimes. But you know, you're sometimes going to get those small losers, and I'll take 3 or 4 small losers, you know, on my record instead of one big loser, and I'm okay with that as often as it happens. Great British Pound, Japanese Yen. We don't really have anything in here as we're still fairly far away from our area in both. But as far as the day goes, you know, yesterday in my mind was a little bit more volatile. Today, I think there's a little bit less volatility. I think if you're doing some intraday style of trading, you're going to have more opportunities on those smaller time scales. You know, here's an area, even if you wanted to short maybe this area up here in the S&P, or even take the breakout long. And by the way, you could certainly do both. You could take the breakout long up until this region here for a very short-term intraday opportunity. But we definitely have slowed down our fall. And a lot of this, if you read, I put a tweet out earlier today and spoke to some people that I really highly respect. A lot of, you know, this is centered around volatility movements, right? And it's the computers around volatility movements. There's really no fundamental reason for this market to fall the way it did. And so that being said, I'm still on the big picture. there's no reason to change our overall bullish sentiment. So that bullish sentiment still remains. Take a look at the length of the wick on this weekly candlestick. That is a really long weekly candlestick that we came all the way down through. But in reality, what I do like about this movement is that it gives us an opportunity, if we do indeed bound higher, on a monthly time period. It would be excellent if we do, because now it would give us an opportunity to see that there's maybe a new place to move our protective stops up a bit higher, as if the market can rally up from this zone. So that being said, I hope everybody has an absolutely great trading day. If there's anything that I can do for you, please don't hesitate to reach out, and I will talk to you soon. See you later. Bye-bye.